Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So as you can see, the volatility in the market has increased a lot from last few weeks, and when the Nifty is not moving in any direction, it is just like consolidating in a range. It goes up for few days like this and then again comes down, and then sometimes we have big gap down or gap up and then a strong bullish candle, and then again as you can see here the market starts coming down. So the current situation, in current situation the market is very volatile. And first we're going to take a look at the Nifty's Nifty 50 structure. So as you can see here, it was in a lower high lower low structure. As you can see here, it was forming lower high and lower low. Then we made a low around 16,410, which has been an very important support zone that I have been talking about in my last few videos. And then we saw a strong up move towards the upper resistance of 18,600. That was the sorry towards the upper resistance, that was 18,600. That was the all-time high level, and then again we saw a sharp down move with strong big white range candles towards this level of 16,800. Then we formed a small base, as you can see here, and then a short up move, and then again pull back combined with strong and have big wide range candles, and then a simple short up move, and then a gap down, as you can see here. And then the very next day uh, it filled the gap with a very strong white uh, bullish candle, and now we are again pulling back towards the downside. So as of now 16,840 is acting as support, and the 200-day moving average line is also approaching this level. uh, last time uh, Last time the Nifty 50 retested this its 200-day moving average, that was back in September 2020, and since then we have not even tested the 200-day moving average even once. So it's not like the bear market is coming or uh, something like that. It's just a normal consolidation. As you can see here, we have been in this range, but for traders like us, this kind of market is very tough to trade in, because one day you get move on the upside, on next day you get a gap down or sharp move on the downside. So for trader like me who is a swing or positional trader, this market condition is not really good. For me to make money, I need market in a trending position. So right now I'm just staying away, not taking any position. Even if I'm taking position very light quantity, like one third of the original quantity. So that is what I'm following right now. And as you can see here, the market structure right now, it's still not very good. It's still again start forming lower high, but it's not forming the lower low. And right now the support is at 16,800, and the 200 moving average is also approaching. So the test of 200 the moving average is inevitable in my view, and the final support is at 16,410. As you can see here, if we join these 2 points, swing highs and the swing lows, it is kind of forming a declining channel, parallel channel pattern, and only one directional move will come if it goes up from here or breaks the channel on the downside. So keep this in mind and mark these levels on your chart. Current support is at 16,840, and 200 moving average is also very near, and the final support is at 16,400. We'll review after that how the market forms in next few weeks. Maybe next Sunday I'll again make a video and see how the market moves. Most probably what I'm expecting to move in this range only, as you can see here, with 16,840 as a support. Now if we take a look at the bank Nifty. Oh, before continuing the video, standard disclaimer, I'm not a SEBI registered analyst, and any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade or making any investment. So now let's come to the bank Nifty. As my view was the banks, my view is still the same, that banks will perform better, and it is still in a better structure than the Nifty. If we take a look at the broader structure, as you can see here, it has been moving in a parallel upward channel. If we combine the swing highs and the swing lows, as you can see here, it has been moving in a upward parallel channel. And if we come down to the price activity of last few weeks, it started forming the structure of lower high and lower low. And as you can see here, it hasn't broken this its previous low that was around 36,500, and now it is just consolidating in this broader range. As you can see here, right now we are just consolidating in this broader range of from 13,500 to 36,500, that is around 3,000 points range. And the 200 moving average is also very near. So support in bank Nifty would be 36,500, or you can take this 200 moving average as the support, and the final support would be this level of 35,000, that is the lower end of this channel, and the support of 34,000, that is a very strong support. uh, from that point, it turned around after a prolonged down move, and right now it's not forming lower low, but it is forming lower highs. So this level of 39,900 needs to be, yeah, 39,500, sorry, 39,500 needs to be taken out before a short at this level of 41,850, that is all-time high level. So it is in a relatively better structure than the Nifty, but still be cautious and take small positions if you want to take, or just stay away, take a chill pill and stay away from the market for few days. Just observe the overall structure. If you take a look at the Nifty IT, uh, yeah, so if we take a look at the Nifty IT, it is also approaching its 200 moving average, and last time it tested its 200 moving average was around this level, that was 14,500 back in June 2020, and since then it has been in a very strong uptrend. There was a short consolidation for 3-4 months uh, back in December to like June, 4-5 months short consolidation. And as you can see here, after that next consolidation started back in September 2021, and we had a small breakout, but after that, that was a very short breakout, and after that market fell drastically. The specifically the Nifty IT index, as you can see here, look at the size of the candles and the strong down move, and right now it's taking support at this level, and the 200 moving average is also approaching this level. So this level of 34,000 to 34,500 is really important support for the Nifty IT, and it is in a bearish structure right now. It's not forming any new lower lows, but it's not even forming the higher highs. As you can see here, the structure is lower highs and higher lows, kind of a triangle, as you can see here. So as long as this level is held, that is of 34,000, and this 200 moving average, so this is our current support of the Nifty IT. And on the upside, this first resistance of 35,900 needs to be taken out before any up move. If you take a look at, now let's take a look at the next index, that is mid cap. And as you can see, the condition of the mid cap is worse than the that of the Nifty 50 or other indices. It's even worse than the Nifty IT, as you can see here. uh, it also formed a kind of a downward sloping parallel channel, and it gave a breakout, and after a straight up move for few weeks. It covered all that up move in just 1 week. Look at the size of the candles, and after that it gave a short up move, and since then it has been again falling. As you can see here, the big gap, and it then took support at the 200 moving average, and then a sharp up move, as you can see here. So the volatility in the market is really high right now, so it's really hard to trade because there is no direction. One day gap up, one day gap down, one day up move, one day down move. And as you can see here, the mid cap index also tested its 200 moving average after the July 2020. So after a gap of more than it's almost a gap of more than 1.5 year, it's now testing its 200 moving average, and that is very normal. If we go through the chart of the previous bull run of 200 from 2003 to 2007-8, as you can see in that period also, the market was in a structural bull market, and the trend was up, but it tested its 200 moving average many times. So this is the first test after the June 20. So I don't think so there is much to worry about, but for the short term, from the trading perspective, right now it's very volatile and it's very hard to trade these days. So this is our last support here, and if it breaks the 200 moving average, then we can see a sharp down move. So keep these levels in your on your marked on your chart. That is at 28,600, and the second level is at 28,900. So keep this whole area marked on your chart. If you take a look at the auto index, I had a view that auto is performing relatively better than the Nifty, and as you can see here, it is performing relatively better. It's just consolidating in this broader range. As you can see here, this was our support zone that was at 11,200, and both times whenever the this index fell, next day it covered that distance with a sharp up move. Uh, but still very high volatility, and this uh, in case of auto index, it's simple. This whole region of 11,200 is the support right now, and this 12,108 is the resistance that need to be taken out. So keep these the levels marked on your chart. If you take a look at the pharma index, it is one of the weakest index right now. As you can see here, it is trading below its 200 moving average. It also broke its important support level 13,000, but after 2-3 days again bounced back and came back into this broader range between 13,000 and 14,000. Now again facing resistance. As you can see here, it is facing resistance at 200 moving average and coming towards this level of 13,000. So right now this level of 13,000 and this level of 12,750, so this would be our next support zone for the Nifty Pharma index, and it is one of the weakest index right now. So I'll stay away from pharma for right now because it is in a very weak structure. If you take a look at the FMCG, FMCG also is in a very weak structure, as you can see here. Although it is showing some signs of support demand here, as you can see here, it bounced back thrice from the support of 35,650. Uh, so it is showing some signs of demand at this level. Although it is below the 200 moving average, that is not a good sign. But if in case as it is seeing so much demand in this region of 35,600, if we see a up move and break out above this level 30,450, then that would be really good for the FMCG stocks. So keep that level in mind. And if we draw a trend line also, as you can see here, uh, our first sign of strong demand or any signs of up move would be uh, when it breaks this trend line at around this level of 37,500 to 37,550. So our first sign would be this, and our confirmation would be this when it breaks above this level of 38,450. So keep an eye on this Fmcg as it is showing some signs of revival. If we take a look at the metals are one of the strongest, as I repeated in my previous video also, that metals are showing strength and it is one of the strongest sector. As you can see here, it gave a breakout, but then again, because of the broader market, a gap down, but it didn't recover as the other indices did. That is some sort of worry, some bit of worry. And but right now it's in relatively in a better structure than the Nifty and the other indices, so keep an eye on this. This is again our resistance level, that is at 5907, and the 200 moving average is also approaching, and it is making higher highs, and the support zone is shifting upwards. As you can see here, first it was taking broad support at this level of 5140, and now it's take now after that it didn't even touch that level and reversed from this level of 5350, and after that it is currently taking support at this level of 5700. So keep an eye on the metals because they are showing strength as compared to the other indices. Now, if we take a look at the PSU, so last week I had a view that the PSU are strong and they were the strongest. As you can see here, it also gave a breakout, but due to the pressure of the overall market, it again came down and closed below the resistance zone, and after that a small consolidation in this range, but then a big gap down, and after that it is now taking support at this its previous breakout region, that was at 2840. So still, in case it reverses from this level and crosses 3050-60 level, I'll keep this on my watch list as 200 moving approaching 200 moving average approaching it. Last time also it took support at this level, a small consolidation and then a strong up move, and this is our next key resistance zone, that is at 3050, that needs to be taken out. So right now it's taking support at this level, this broad range of 2800 to 2850. Keep an eye on it, keep it in your watch list, and look for any reversals. Now in at last, if we take a look at small cap index, it is also weaker than the Nifty 50, as you can see here. It eventually gave a breakout above the all-time high level, but after that it covered that whole distance that it previously covered in 2-3 weeks in just 4 days. Look at the size of the candle. uh, and after that it showed some demand from this region, that was the previous support, that is at 27,200 to 20,400, and after that a small up move, and after that since then it has been falling. Look at the gap down, it didn't even cover the distance on the next day, and now right now it's taking support at this level of 200 moving average, and that was its previous support of 2000 sorry 27,200 250. So this is still your support zone, and in case it breaks this level, as you can see here, in case it breaks this level, then it would be below the 200 moving average. That is not a good sign, and we can expect a sharp down move in case it breaks this level. So that was it for today. In case you learned something, and if you enjoyed the video, please consider hitting the like button, uh, and don't forget to subscribe and share. uh, that was it. So goodbye, take care.